here, but Saleem Saab had a question, but there's a round table, and we'll get to that.
So thank you very much. It's an excellent discussion, very informative, very learning. Just a curiosity that countries like Pakistan, where people normally have relatively lesser belief in their local domestic currencies, and they do want to convert it into the harder currencies. So when you allow the, say, USDCs, you said that you would like to convert your some of your salary savings into USDTs. So then it would be something that it is sort of a distrust in your own currency, and you are promoting that you should be converting your savings into the hard currencies. Probably for a common man, it would be more advisable to advise that we should have those protective instruments available, the factories, the businesses that are generating value, in that value they are investing their savings and protecting their the savings from inflation and all these value depreciation, to the returns that they are generating from the investments in those productive assets. So here we see that although we are discussing that, yes, this is a digital goal, but still, just like the goal, it is still an asset that is not producing anything. It is sort of a idle investment that, yes, people are betting because people are forecasting and anticipating and having that projections that the value will go up because it's a limited in number. But at the end of the day, wouldn't it be advisable for the regulators that to promote investment in the productive sectors that are generating employment opportunities, that is creating value, and from that value, the people are protecting their savings against the inflation and against the depreciation, etc.
So if I may, it's not a mutually exclusive product to start with. It's as simple as saying, okay, should we ban bank accounts from having a savings account then in rupees? Because wahan pe bhi jo aake rupee sits there as a saving account, right? Doesn't go in the industry. Because in industry, 1,000 rupees can't go in the industry unless you go buy shares with Khulun's fund, for example. Now, or tokens. So you could do tokens as well. Tokens have businesses behind them as well. But the underlying premise is you have to separate the transaction with the savings part. The transaction still happens in rupees, but the savings that they want to put under their mattress should not be in rupees, which are depreciating value every day. Should be in gold or Bitcoin in a custodial environment where it increases value every day. So that's one part. Now, if you do want to transition that into an industrial base where the person should buy shares and put it in more productive businesses, then now that comes to the SECP and PSX. PSX right now has only 250,000 registered traders across Pakistan. We have 250 million people and only 250,000 registered traders. That means PSX has a tiny fraction of Pakistan's people actually investing in the industrial base. But we on Binance we have what? 25 million? 10 plus million. 250 million? No,
Globally. No.
20 million. 20 million people trade every day in currencies that we don't know about, that the government has zero control over, zero regulation over, zero tax over. What we're suggesting is we take that 20 million, move it to a regulated space where they still put it on top of a digital layer and government can earn taxes on it. And secondly, on the flip side, PSX digitizes what you were talking about, RWA, real world assets. PSX allows the stocks of Sazgar or the stocks of Nishat to be tokenized, so the same 20 million now start trading on that. So all of a sudden you pick up both on the same platform.
I would just add one
Please
thing.
do.
Thank you for your question. I think it's a very good question, and I think it's something that we need to debate and get to a solution for. But I think that, as Durrani said, it's not mutually exclusive. I think it's not a zero-sum game. You can have both, right? I think one thing I do want to talk about Bitcoin, which we touched upon, but Bitcoin, because I think the premise of your question was holding fiat in crypto assets is not productive for the economy, effectively. I would say there's two ways to think about this. One is that we need to think about regulating digital assets and crypto in a broader way. If you think about it from a remittance perspective, it will help the economy. If you think about allowing people in the country to trade in digital assets, taxable income can come. If we think about Bitcoin mining, we can actually enable more opportunity for the government. If we can enable our tech industry to develop so that we can have blockchain engineers here working abroad so that they can get paid in digital assets, it can be beneficial for the economy. So I would just think of it broader. And then the final thing I would say around Bitcoin, we spoke about Bitcoin quite a bit. Bitcoin, from my perspective, is the only verifiable asset globally known to man that is finite in nature. There's only ever going to be 21 million Bitcoin, ever, that are mined. Gold on a yearly basis increases by 2% supply globally. Oil, people find every single day. So Bitcoin in and of itself is exactly like gold long term. And therefore, it's as Durrani was saying, it's the same question as, do we stop people from having a savings account? Do we stop people saving in gold? We won't, right? So it's not mutually exclusive, basically.
And I'll just add two more points. First is, when I look at global markets, the asset managers such as BlackRock or Fidelity or Capital, when they recommend to their investors, they are still putting digital assets as an alternative assets, which means they're recommending around 3 to 5% exposure of their overall asset under allocation into digital assets, not 100%. But I think the general, one of the implications of the point which you raised is an underlying assumption that by regulating it, we are promoting it. While in this case, like was discussed earlier, digital asset did not originate by a regulator or by a government or by a bank. It is a movement of the people. And so actually, digital asset doesn't need a state bank or a SECP to promote it. It's already popular. So it's not a question which people are asking.
To formalize it.
Please.
Yeah. So I'm not saying that it is sort of a promotion. Currently, under the framework, it is not something that is being legally sort of something which is legally permissible, or because people are doing on informal channels. So, you see that we have been running a campaign to bring the cash. Ayad was discussing that cash is something which is a big trouble. Yes, it's a very huge trouble. What we are trying and making efforts that bring that cash into the system, so that the system should be able to use it in the productive channels.
Yes.
So my concern is that while the appreciating of value of all these, the BTC and other things, but unless we come up with a mechanism whereby whoever is having these balances of BTCs, those balances could be put to the productive use, then it would be something that is not only good for the investors, but also good for the economy and the society as well. It is still something, yes, it can give me a very handsome returns, but nothing for the society as a whole.
Absolutely.
So we must see that what kind of mechanisms we can have so that this, even the gold, that gold is a very bad investment to me.
Absolutely.
It's just giving me some protection, but still it's not creating any value. So how can we create value from all those digital assets? That was my concern.
Totally agree. And so my background is I was the CFO of Nuvei. It's a payments processing company, 20 billion market cap, listed on now just taken private. It was listed on NASDAQ, and when I was a CFO, it was listed on London Stock Exchange. So when you buy a ticket on Thai Airways, when you put the credit card details in, Nuvei does the payment processing. So and I'm on the boards of a few companies in the payment sector. So Bitcoin, the original paper which Mohammed alluded to, which was published in 2009, it was a mechanism for peer-to-peer transfer of money. So it's a payments device, it was not envisaged as an investment product. So, and that's the key point which I think has come across in all of the conversations, that it's an evolving area. We are very early in it. Regulatory role is quite important to bring clarity and education, because if you are part of the conversation, then you can move it to a place where you want to move it, to helping the economy. If you're not part of the conversation, then you don't have an ability to